According to the CMHC, or Canada's Mortgage and Housing Corporation, more Canadians are making their mortgage payments today than they were at the same time last year. How can that be? Because housing prices are up year over year, and the BC REA's economist Brendan Augmenson reported that shelter inflation for homeowners and renters accounts for the majority of increased costs that we are seeing right now. Well, today I'm going to share with you the details of what CMHC said and how that may not be representative of the complete housing market right now. And I'm going to jump into that right after I ask you to subscribe to the channel if you would like to stay up to date on my local real estate market here in Surrey and the Fraser Valley. And if you're still managing to make your mortgage payments in the face of higher interest rates, make sure you don't miss your payment of clicking the like button for the YouTube algorithm to help me get this information to other Canadian homeowners just like you. And of course, if you're not yet a homeowner and you're looking to get into the market, you can book a call with me right now using the link in the description below this video. And that doesn't just have to be if you are looking to buy within the Lower Mainland. If you're reaching out from anywhere in the country and you need real estate help, I'd love the opportunity to introduce you to an agent that I know and trust in your area, because I know how hard it is to find a really good agent that you can trust. And with that out of the way, let's find out what CMHC is saying about Canadians paying their mortgages, and more specifically what the chief executive of CMHC, Romy Bowers, testified in the House of Commons committee this week. And that was that, well, the number of homes that are exposed to these now higher interest rates are causing the greatest worry for the CMHC right now is 6,000 across the entire country. But despite the raise in interest rates, Canadians appear to be doing better paying their mortgages now than this same time last year, and that only 0.25% of CMHC insured mortgages have missed payments, compared to double that number, or 0.5%, this time last year. Bowers says that this is a result of Canadians having equity within their homes and very strong employment. But do you think that's reality? I mean, how can that even be, since rates have increased from 0.25% in 2020 and 2021 to now 5.0% in 2023? And fixed rate mortgages are now almost universally over 6%. Well, first off, I have to point out that something like 50% of fixed rate mortgages have not yet renewed at today's higher rates, meaning that many homeowners have not yet felt the pain of today's new higher payments. Bowers did say that other borrowing is at greater risk, like auto loans, for example, which has big banks like BMO exploring the possibility of selling their entire RV loan portfolio. But homeowners are more likely to pay for their homes before other things like cars, RV loans, or even credit cards. And I know it's not popular to say, but on a paycheck to paycheck basis, homeowners are doing better than, say, people who are renting. And car loans are easier to get, leading me to believe that the default on other types of loans might happen to renters disproportionately than it would to people who own real estate. The next thing to consider is that the market has rallied this last spring in the face of relatively low fixed rate products as a result of US banking failures. This led to homeowners that may have been in trouble managing to sell, because one way to look at it is that they have been saved by rebounding market prices. Let's face it, many of those people who were stretched thin by over leveraging with cheap money, well, they have now sold to others who have qualified at much higher payments and can now afford those new, more expensive loans. But there is a possibility that CMHC is not seeing the whole picture. This is because investors are required to put down 20% or more, as are any homeowners who bought properties anywhere in the country at a purchase price over $1 million, meaning that the Canadians possibly with the highest mortgage payments won't appear on CMHC's books. And let's face it, I'm seeing tons of investor sellers coming to the market who bought in the frenzy of 2021 with very cheap money. We're going to see people start selling their properties, or maybe even missing payments, because of these high carrying costs. But think about this. Which property are you going to miss your payment on first? Your investment property where somebody else lives, or your principal residence where you and your family sleep every night? I think it's a pretty obvious choice. And let's face it, with less than 0.5% of Canadians missing their payments right now, the market is still in a pretty good spot because these are Canadians who traditionally are very good at paying for their real estate. And remember that CMHC only deals with properties financed from 5 to 19% down that are owner occupied and purchased for less than $1 million. So yeah, CMHC's business is naturally geared towards clients with good credit and who live in the property being insured on their books. Of course, yes, that means they have great exposure to the Canadian real estate market, but in the overall scheme of things, they know their customers have a very, very high likelihood of paying their mortgages. And at the same time, we have to know that not everyone over the coming 18 months is going to fare so well. And if you're someone that has dug in too deep and you have the need to get out from under a huge mortgage payment, way bigger than you thought it was going to be when you took that mortgage originally, or if you have negative cash flow on an investment property, know that if you need, you can book a call with me right now using the link in the description below so we can discover if it's time for you to get out from under that property. Thank you for subscribing, clicking the like button, and we'll see you in a couple of days.